What's up, everybody? My name is Joe Brown, and this is Heresy Financial. I want to give you a quick update on the real estate market going into August of 2021 here. Despite the level of fear, uncertainty, and doubt that is being pushed about real estate recently, I want to give you 3 pieces of data that will help you make a more educated decision about whether to buy, whether to sell, whether to hold, just so you understand exactly what's going on in the real estate market right now. Ready? Let's dive in. Number 1, let's look at some of the main causes of concern for the real estate market right now. Basically, this comes down to the fact that it looks like there's a potential for a wave or a flood of people just leaving the housing market. One of these is due to the eviction moratorium ending. The other one is due to forbearance on mortgage payments starting to end. People are looking at this data, looking at how many people are in forbearance and saying, hey, all those people can't actually pay their mortgage. First of all, that's not true. Forbearance was available to pretty much anyone, regardless of whether you could pay your mortgage or not, and plenty of people, potentially even most people, used forbearance just to give themselves an extra $1,000, $2,000 a month during the pandemic, during COVID when it hit. And as that option has been continued, many of them have just been continuing to push that out. So to make the claim that the forbearance ending is going to result in a ton of foreclosures, people not being able to pay the mortgage, is complete garbage. Number 2, people are looking at the eviction moratorium ending and saying, hey, just because you're investing in a property that has a renter in it, that has a tenant in it that's cash flowing, doesn't mean that that's going to continue, because there's an eviction moratorium right now and that's going to come to an end, and then all of a sudden everybody's going to get evicted, and that's going to contribute to a potentially deflationary death spiral. There's going to be tons of havoc from that. People don't have anywhere to live. Well, guess what? If everybody gets evicted, where are they going to go? Are they going to be homeless? Maybe some of them, but pretty much every single one of them is still going to need somewhere to live. That means if you have rental properties that you're invested in and they're cash flowing, you're still going to have a pool of renters to choose from. Further, both of these things happening to their worst extent rely on politicians allowing the painful option to take place. And right on cue, look at what Speaker Pelosi said. She today was urging Congress that they must extend the eviction moratorium to October 18th. Now, I have no idea whether this is actually going to go through or not, but just like people who are worried about a deflationary death spiral, a massive collapse of the economy, you as the federal government can make the decision. It just takes political will to spend enough money to buy enough of something that the price cannot fall, because you have the ability to spend an infinite amount, because every dollar you spend, if you have to borrow it, can be borrowed from the Federal Reserve, from the central bank, which has an infinite ability to print, meaning that if the entire economy, everybody in the entire country sells every home, sells every stock, sells every bond, the Federal Reserve can print enough money to finance the government to purchase at any and all of that if they wish to do so. Meaning that if there's the political will to stop prices of anything from falling, it can happen. Now, I'm not guaranteeing that that political will be there. I'm not guaranteeing that there won't be political gridlock and decisions won't be able to be made. I'm just saying that if it comes down to it, it can happen. Moving on to number 2, if we look at individual people, if we look at the retail home buyer, sentiment is at basically an all-time low here. Take a look at this chart with me. We're going to see 3 lines. We've got the gray line, the dark blue line, and the light blue line. Let's start off with the dark blue line. This dark blue line is the percentage of people surveyed who say that right now it's a good time to buy. And so you can see here that right now, as the most recent data, this is since 2000, in the last 10 years, this is at the absolute lowest point it has ever been. More people right now say that it is, or less people right now say it's a good time to buy than anybody in the last 10 years. Now, if we look at the light blue line, we can see that this one is the percentage of people who say that it's a good time to sell. And again, this is the highest level that this has been in the last 10 years. Now, if we look at the gray line, what that's basically doing is combining those two numbers. And so you're taking the difference between the two of the total number of people who say it's a good time to buy, the total number of people who say it's a good time to sell. We can see that together, these put the index at, by far, way lower than it's ever been in the last 10 years. And if we look back at the numbers at the beginning of the pandemic here, you can see that this was actually a really great time to get into real estate. This was when people were experiencing tons of fear, and it was right before prices started to skyrocket. And if you look at the difference in the numbers, that dark blue line was a lot higher than that light blue line, resulting in the gray line being very high. It shows that this index is more of a contrarian indicator. If all of the individual retail investors or home buyers think that it's a good time to sell and a bad time to buy, they're probably wrong. Just like now, if they all think that right now is a good time to sell and not a good time to buy, there's a good chance that they're wrong. Now, is this a crystal ball? Obviously not, but it's just another indication of who the people are that are saying it's not a good time to buy right now and it's a good time to sell. Contrast that with who's actually buying right now. It's the big boys, it's the big money. And take a look at this article, Invitation Homes. They own like 80,000 homes across the entire United States. They just raised their rents. On average, across the nation, across their portfolio of homes, they raised their rents by 8%. Under 6% of that was for renewals and about 14% on new tenants, which clearly means there's massive demand. If you own that many homes and you can raise your prices by that much, you're not worried about people walking away. There's a massive pool of potential renters. So yes, if you purchase a home right now, you might be paying a lot more than you would have paid if you would have been able to purchase it a year ago or 2 years ago or 5 years ago or 10 years ago. But guess what? If you're renting, you're paying a lot more than you would have a year ago, 5 years ago, 10 years ago. Now, I get it. Some people are in financial situations that up to this point have precluded them from being able to purchase a home. But that doesn't mean you have to not invest in real estate whatsoever. There are plenty of available options for literally anybody to place literally any amount of money into real estate. The 3 services that I always talk about on this channel are ground floor, Fundrise, and Roofstock. Roofstock, you buy single family homes you can find them around $80,000, $90,000 on this platform. This website is basically like Zillow for investors. You can use ground floor to invest in real estate debt that cash flows up to 12%, or use it to borrow to do a fix and flip real estate development yourself, or you can invest in private REITs through something like Fundrise with as little as $10 for their lowest tier. I've got all 3 of those services linked in the description below. As always, I really appreciate you guys. Thank you so much for watching. Have a great day.